FM 90.
Brought to you by Housing Finance Bank, a financial institution regulated by Bank of Uganda. Housing Finance Bank, we make it easy.
Your views, our interviews on Spectrum, Radio 1 FM 90.
Thank you so much for joining us on this edition of Spectrum, coming to you live on Radio 1 FM 90, broadcasting live on its website, which is www.radio1fm90.com. While on that website, look for the icon with the word Listen Live. We are also live on the different radio listening apps, TuneIn, Afromobile, your TV channel, Radio Garden, and Stream Africa. Download any of those from the Google Store of your smartphone, look for Radio 1 FM 90. And as long as you have an internet connection, you should be able to listen to our quality programming all through the day. The other option of listening to us is via your TV set. If you have a DSTV connection, look for audio channel 897. If you're on StarTimes, look for audio channel 97. My name is Kenneth Lukwagandason, your host. Today my guest is Twaha Kayondo. He's an officer with the Domestic Tax Department of the Uganda Revenue Authority. Good evening, Twaha, and welcome to Spectrum.
Good evening, Kenneth Anderson, and dear listeners at Spectrum.
All right, you can join us in this discussion by sharing your views using the WhatsApp line, which is 0703-090-090. You heard it's a taxman, so we are continuing with the sensitization of the public about taxpayer obligations as the year comes to an end. And today, we will broaden the discussion and also look at income tax. What do you need to know as a taxpayer in that particular bracket? Mr. Kayondo, the year is coming to an end. You come from the Domestic Taxes Department. Generally, before we dig deeper into income tax, what has been the performance of this particular department, looking at the figures and the way things have turned out in URA?
Yes, Kenneth, and dear listeners at Spectrum. At URA, from the Domestic Taxes Department, yes, I can say we are moving on well, although we are having a few shortfalls as per the projections of the fiscal year under question. You realize that by this time we should have collected some good amounts, but we are short. The December target alone, we are less by about 2.6 trillion in the remaining few days. So, it's the reason we are here. We want to sensitize the public to get to know that it's their candid obligation and it's a civic duty to pay tax, and therefore we want them to give Caesar what belongs to Caesar.
And so there are people who have been saying that probably the reason why people are not paying, things have not been working out well. But do you believe there are people out there who are not meeting their obligation as you are?
Of course, you know, in the tax administration, there are two terminologies. We have tax avoidance, okay? And then there are those ones who dodge it. Tax avoidance is illegal. You manipulate, and then when you choose not to pay and you ought to pay, then that is an illegal one. You can't rule out that there are people out there, say, who smuggle in goods. That's one category, okay? Because when you smuggle in goods in the country, you're evading tax. You're not avoiding tax, but you're evading tax. So we can't rule out the fact that, yes, you know, we have porous borders, and so under that category of customs duties, custom taxes that are supposed to be paid on goods entering country, we have that loophole. You know, we have a porous border. And then for income tax, for the taxes that are levied within the country, you realize that there are guys who may be say registered to help government to collect tax in trust. For example, those who help government of Uganda to collect value-added tax, because value-added tax is a tax on consumption, and therefore they are only registered as taxable persons to help government collect on behalf from the final consumer, because it would really be too hard to administer tax to Kenneth from the mineral water, then URA is here to get say the 18% of say 300, and then to whoever. So people are there, and yes, they do collect this government money and don't
remit it
timely. But also there are those who choose to think that they will escape forever and run away with government money. So the assertion that there could be people out there who don't meet their civil obligation of paying tax as per Constitution of Uganda.
Those are some of the challenges you're facing.
Yes, yes.
All right, let's jump in. Our discussion today is about taxpayer obligations. The year is coming to an end.
Yes.
As you are what are your expectations of the taxpayers where we are right
in
now?
a broader view, at the end of the financial year, or at the because at URA we have two accounting periods. We have a normal year of income that spans from the 1st of July to 30th June. But also we have other individuals who choose to account using the calendar year of income, which is 1st January to 30th December. So the expectations are twice. We expect individuals to file final income tax returns for the year ended 30th June, but also those who are accounting for a normal year of income to file a provisional return. This is candid because the clock is ticking, and if you don't file a return when it is due, when it's an obligation for you, then you end up affecting your working capital through penalties and interest. So we expect Ugandans to really understand that December is a very important month as regards to filing of returns, particularly income tax, which is income tax, rental, or business income tax. So you realize that we're going to talk about income tax in a broader perspective. And we are saying, when we talk about income tax, somebody should be able to understand what income tax is. Okay.
Well, you're here to actually share that.
Yes, and
So let's break it down.
And we are saying that for anybody who is out there listening to us, they should understand that first of all, for any tax to be charged, it should be charged within the law. Okay, and therefore, income tax is governed under the Income Tax Act, and the section particularly is Section 4 that imposes income tax. So for any tax that has to be imposed, there should be a law that stipulates the specific tax and then the specific rates. And therefore, for income tax purposes, we can break it and say that it is a tax that is imposed for every person who has taxable income or who has chargeable income for the year of income. And when we talk about chargeable income, means the amounts of income that are subject to tax. When you want to derive what we call chargeable income, you'll get all the gross incomes of a person which are subject to tax. In other words, the income that is not exempt, to speak out loud, because we have income that is exempt.
For instance?
For example, the income that is exempt, someone who earns money or income that is below the threshold. If you are an employee,
okay,
and your gross income is below 230,000,
you don't pay.
You don't pay. And then we have professions that are exempt from tax. For example, the employees of the Uganda Police Force, the soldiers, the Uganda People's Defense Force, people who are in the internal security organization. But that has an exception. Someone should be only earning that income. But if you have that is below the threshold, but also you have a side hustle, the way we call it these days, and with your side hustle you earn above, say business, you have a saloon somewhere as a policeman, after duty you run there and you have boys who are doing the work, and the amounts of income earned, say, span above 10 million, then you're supposed to declare that other income under business.
So in that case, who pays? It's the business that pays, or you are the individual?
Unless it is explicitly spelled out and you've registered a company. Where you've not registered a company, because you know a company is a separate entity which can sue or be sued. If you've registered and if you've incorporated the tax under the laws of Uganda and you've registered it, then it will be that company, the non-living person. But if you are a police officer and you're operating as the police officer, perhaps you've registered a business name, Mokisa Enterprises or Mokisa and Sons, but you're trading as Mokisa and Sons, but then the tax identification number you're using is your personal number, then you will be the one who is subject to paying this tax.
All right.
So you realize that also when we talk about income tax, the categories that constitute the union set. Remember when we used to have that simple mathematics, we used to have a topic that was dealing with these sets, and then now the union set in the topic we are covering is income tax, but there are subsets that constitute to income tax.
All right.
And they include corporation tax.
Paid by who?
The corporation tax is paid by the companies.
Okay.
If say you have Mera Investments Limited, okay, the tax that is paid by the company is what we call corporation tax. The non-living person, person I have talked about who has been incorporated under the laws of Uganda, okay, and is a separate legal entity that can sue or be sued. And then we have what we call the individual income tax that I have already talked about. If you can remember the narration of a policeman who has employment but also doubles with a side hustle of a saloon in Wandegea. So that is business individual income. And then pay as you earn, you and I. If for purposes of understanding of our listeners, that I'm at URA and I am paid a salary of say 2 million, okay, so the amounts of money derived from my working at URA constitute a salary, which also in the end, if it is above 230,000, constitutes chargeable income. And therefore, I will be charged a tax, and at URA, will be responsible to remit this tax at every end of a month when they have paid me. They withhold this tax because surely, you know, it would be too hard if government, it would be too hard to administer tax if every employee was supposed to receive all the packages declared or spelled there in their contract of service or contract of employment, and they are supposed to take the salary at URA themselves. I don't know whether you and I, we would really be compliant Ugandans. You get what I'm saying? And then there is also withholding tax. It's part of income tax. Withholding tax is a tax that is withheld by the withholding agent. And the withholding agent for this purpose is the payer, the recipient of a service, the recipient of the supply of goods. You supply Radio 1 with consumables, okay? And as you supply Radio 1 with consumables, as long as the total amounts of the contract supply will exceed 1 million shillings. Despite the fact that maybe you are breaking the supplies at say 400, 200 and 400 to make 1 million. As long as the total contract supply constitutes therein to 1 million, you, the person paying, you're obliged to withhold at a rate of 6%, and that also constitutes to withholding tax. And we shall see as we navigate there deeper in, and we shall break how is it done, when is it filed, and all the rest. But also, Kenneth and listeners, the Income Tax Act of Uganda separated these two incomes. We have what we call income tax in the broad perspective, but then the framers of the law thought it out loud to separate income earned from letting out movable and immovable properties, which constitutes rental income. And therefore, rental income is also a subsection of the union set that I started talking about of the broader word income tax.
All right. You've broken down and indicated to us the different forms of taxes. So at what point are these taxes paid? And if somebody is out there and they want to comply, what do they have to do?
If someone is out there and wants to comply, for example, for pay as you earn, they are already compliant as long as their employers have registered at URA for pay as you earn, and as long as they are paying them, they are withholding the tax payable at the rate specified therein and remitting it timely and declaring or filing consequently the returns in question. And then for purposes of income tax, if someone is out there and is wondering when can they pay this tax and how is it done, for example, the corporation tax is imposed on corporate entities engaging in income generating activities, and the rate at which this tax is charged for the corporations is at 30%. 30%, however, they are allowed to deduce the costs they have incurred in generating of the income in question. For example, if at all, say, Mera Investments Limited or Radio One Enterprises Limited earned 100 million gross income, they will be allowed to deduce salaries for the people who are here working. They will reduce the amounts they have spent on electricity, the utilities in other words, and then the amount that will remain, okay, will constitute what we call chargeable income. And this chargeable income will be slashed at the rate of 30%. And then for purposes of withholding tax, it is deducted at source by the withholding tax agent upon making a payment to another person. And the Income Tax Act Cap 340 specifies the individuals who have been designated and listed to withhold tax. Not every Tom and John can wake up and say, yes, I am going to withhold money from you. No. Okay? And a person, a withholding agent is that person making the payment and is obliged to withhold the tax, and the recipient of the payment is the payer or the payee. And then one will always ask, when is tax supposed to be withheld? We have different rates and forms, and therefore I'm going to spell them out loud for the purposes of our listeners. Get them out loud and they find where they belong, because at URA we are simply saying that let them understand their obligations and be compliant and reduce at the cost of doing business. Of course, the first kind of withholding tax is employment. You and I remember the scenario where I said when I receive a salary, it is deducted or withheld at source, and it's upon the obligation of the employer to
remit
declare
it.
and remit it. And then payments on professional fees. You and I perhaps have engaged services of the lawyer, maybe the surveyors, quantity surveyors, and the auditors to have your audited books of accounts, and you pay them. For the professionals, it doesn't matter the amounts of money you're going to pay. Remember, I started by saying that for a supply of goods, the amount should be 1 million and above, such that you can withhold the 6%. In this regard, specifically for professional fees, if you went to Rukwag and Company Advocates and you sought their services, and they give you a bill of 400,000, perhaps you wanted to make a statutory declaration, okay? The 400,000, you, the person paying, you are obliged to withhold the 6%, regardless of the amount therein, as earlier spelled out for the supply of goods, where I said it should be 1 million or plus. So you withhold the 6%, and this applies to resident persons. We'll get to understand what happens to the non-resident person, because for them, before I get there, I can authoritatively say that the rate will change to 15%, although theirs will be a final tax. That is withholding tax on payments to foreign, say, entertainers and sports person is at a rate of 15%. For example, peace be upon him, Lucky Dube the Great, if he was around and he comes back to the way he made us flood Nambole, and then say he gets about 1 billion shillings, okay? And the promoters give him, say, 1 billion shillings. Upon departure or upon receipt, the promoter say, Baram, okay? Before paying him the 1 billion, Balam would be or will be required to withhold 15% from the 1 billion.
Why is it? Because he's a non-resident?
Remember,
why is it higher than the 6%?
The logic is here. For a non-resident, this 15% will act as a final tax.
Okay.
But for you and I, if, say, I came here and offered consultant, of course I'm a taxman, and I offer consultancy service, it would be against the ethics. But if at all I'm not a taxman and I'm out there and I trade in tax consultancy, and I brought here tax consultancy to your company, and you're supposed to pay me, say, 1 million, okay? But remember, I am not only working for you, I am a freelancer tax consultant. At the end of the accounting period, okay, or a fiscal year, I am supposed to declare and aggregate all the income earned that relates to the fiscal year in question. When I aggregate, remember, I am supposed to pay tax at a rate of 30%. And I have only paid tax at a rate of 6% to whichever place I have traded as a tax consultant. Therefore, that means that the remaining 24% is tax due. And therefore, if I am accounting for tax purposes, I will get the amount in total payable and remove any credit that I have received from the amounts already withheld from the people where I have supplied my services. And therefore, for me, I will be required to add more money to get the rate of 30%, but the non-resident will only be required to have the 15%. He has no any other further duty whatsoever to file any return. It's a final tax, as you quit Entebbe International Airport.
All right, Spectrum on Radio 1 FM 90. It's time to go for a break. But when we return, we'll continue with Mr. Twaha Kayondo to give more explanation about income tax. We have looked at a number of issues already, but there's quite more to cover during the next few minutes. So keep tuned to Radio 1 FM 90. But we also have questions coming in via the WhatsApp line. Already I can see a comment from Mr. Makanga. We will be sampling those comments. I'll keep them coming through our WhatsApp number, which is 0703 090 090. Spectrum continues after this break.
Spectrum on Radio 1 FM 90.
Well, thank you very much for staying with us on Spectrum, live on Radio 1 FM 90, live on our website, www.radio1fm90.com. Click on the icon with the word Listen Live. We're live on the different radio listening apps. We're also live on DSTV, audio channel 897, and on Star Times, you can catch us on audio channel 97. Keep your views coming. Our topic of discussion today is tax obligations as the year comes to an end, and we're looking at income tax. My guest is Mr. Twaha Kayondo. He's an officer at the Domestic Tax Department of the Uganda Revenue Authority. Your views are very critical as taxpayers, so that URA can improve or give you more information about what you do not know, to be able to comply or to understand the kind of taxes you are supposed to pay. Mr. Twaha, we have looked at a number of issues, understood what income tax is, the different categories, the obligations. Let's move forward. What else do you want the listeners actually to know as they think about the obligations and how to fulfill them?
I want to quickly run through the different rates of the different categories that are supposed to be withheld. I was moving, and I want to tell the listeners that if at all they are paying out dividends to shareholders, they are supposed to withhold at 10%. And then international payment also attract 15%. Payment on import at a rate of 6% of the custom value. If I'm importing a car, we will only pay withholding tax at 6%, depending on the CIF, which is the customs value. And then withholding on commissions to insurance is 10%. Gaming and pool betting, if at all you went and got your 200 million from your gaming akapapula, then they will withhold at 15%. And then the mobile money people, when MTN Airtel is paying them, is supposed to withhold 10% as commission. And then what I would and how do they account? They're supposed to file the withholding tax return by the withholding agent by every 15th of the month following the month within which the transactions in questions have occurred. And then, of course, I want to quickly run through rental tax. And rental tax is income earned from letting out movable or immovable property, that is land and buildings in Uganda. It's administered using the Income Tax Act, Cap 340, but most importantly, Section 5. It's a separate income tax regime that has been, whoever has rental income, it is presumed that as if the sole income that you earn is the reason that you have to file it separately. If you had business, you will give us declarations for business, and then specifically the rental return will come as a solo. And we are modernizing the rental declaration, whereby we are simplifying it into a web form, where we are moving away from the tedious and tasking Excel that we've had before. It's a development we are cooking, and when it gets ripe, we are already telling the public, but when we roll it out, then we shall inform them how and when they can do. And for purposes of rental income, I have already said it's provided for under Section 5 for income tax purposes, and it does not matter whether the building is let out as a residence or for commercial purpose. You may have your building, whether you're renting out for people to sleep, as long as you earn rental income from whoever is using your building. We classify that as rental, and duty is upon you to declare and pay the rental tax. The rental tax has rates, Kenneth and the listeners. For individuals, the rate is at 12%. However, the individuals are given a threshold of 2,820,000. If you have rentals and you don't earn above that in the 12 months, then yours is exempt. The moment you earn above that, we shall deduce the threshold, and what remains will be slashed at a rate of 12% for individuals. And the regime we are operating right now, the individuals are not given any allowable deduction. And for the non-individuals, the companies, corporations, the trustees, they are taxed at a rate of 30%. What is peculiar here is that the companies or the non-individuals are required to expense. Okay, they have an allowance of allowable deductions. I have repaired here, I have changed the tiles, those things, up to a maximum of 50% of the gross annual rental income, and you are not supposed to expense beyond 50%. For example, if you earn 100 million, you can't expense above 50 million, and what remains will be taxed at a rate of 30%. They are supposed to declare through the rental return, which gets due if you are an individual. Within the first 3 months, you should be able to file as a provisional, and if you are a company, within 6 months following the commencement of the fiscal period or the financial year, you're supposed to file a provisional return. A provisional return, Kenneth, is just, if I can say, is a sneak peek, or it's painting a picture of what you think your income will be. It's not actual, but you look through how many tenants you have, and you paint a picture at URA and pay what you've painted. And of course, this comes with an obligation of filing a final income tax return at the closure or lapse of the fiscal period in question, and then you're given 6 months to do your audited books, put all your things together, and give a final income tax rental return at URA. And then, of course, you realize that I have the two things that are key are the rates, differentiating between the individual at 12% and the non-individual at 30%. The individual not given any allowance to make deductions for the expenses he has used to derive income, but the difference comes in at the rate being lower. And then the company allowed to deduce up to 50% of the gross income rental earned, but taxed at 30%. Then, of course, we will go and talk about how is this income computed. Remember, I started by telling you how we have also employment income, and employment income is declared through the pay return, and who is supposed to account for employment income is the payer, is the employer who pays, and the burden lies upon him to withhold and pay. Where he doesn't withhold, and I repeat, where an employer doesn't withhold the tax from the salaries that are above the threshold for pay as you earn, and you are get the information about this, the employer will be liable to pay the amount of tax that relate to what the employees should have paid as their tax. Okay? and now the burden lies upon him, where he can find ways of getting the employees and recover the money. Now that will be their inside discussion in house. But at URA, we shall say, please give Caesar what ought have been for Caesar.
Okay.
Yes.
So those are some of the likely implications if the employers do not actually comply. Do you actually reach a point where you can prosecute some of the people who are not compliant?
Kenneth and dear listeners, this is, I can't hide this out because URA is mandated to collect government revenue. Where it comes that you failed to pay tax and there is reasonable ground and evidence that perhaps you collected, say, this money from the employees and you failed to withhold, we shall not automatically get to prosecution first. We shall engage you within the manner that is reasonable to make you pay this money. But where you fail, perhaps we shall have warrants of attachment to recover tax. You and I are old enough to have witnessed some companies that have closed because of failure to pay tax, and they have gone to court and they have lost in court, and then court awards URA to find any other way to recover tax.
So there's prosecution.
Yes.
All right, let's look at the feedback that is coming in from the listeners. They sent in messages via our WhatsApp line. We have questions coming in from Mr. Makanga, and there are 3 of them. It says, URA has frozen people's bank accounts and locked their premises. How can they then pay their tax obligations if they do not receive money from their customers or pay their suppliers? Do they get the money from under their beds, or should they rob other people and pay URA? That's one person who actually thinks some premises have been locked. How does URA set its target? What economic parameters do they use when everyone agrees the economy is suffering?
Who is that one?
He's called Makanga. Everyone agrees the economy is suffering.
He has more than one question.
Yeah, he has more than one question.
Okay.
Yeah, he says the economy is suffering, and when the economy is suffering, and we know the effect of COVID-19, are they realistic? You are people, you're setting your targets. Are you realistic? They say people have areas stretching several years. How do they expect them to pay in 2 weeks? That is Makanga there with those 3 concerns. Then we have Brian listening in from Kigo. He says, Spectrum, I run a single member company for selling insurance products. The company earns commission after the insurance company withholding tax agent withholds 10% tax. Do I need to pay income tax again? That is Brian listening in from Chigo. Okello Patrick Bonyo from Busega says, can I be able to reclaim withholding tax? If so, how do I go about it? That is Okello Patrick Bonyo there. We have another comment coming in from Slivia, listening in from Entebbe. He says, what taxes are payable by NGOs as entities and on donations or grants? And then she also says, and on incomes. Also, what taxes are due on individual organization, NGOs importing medical equipment, materials, and services? We have another comment coming in from Henry. How do you feel when a business has closed and the owner confesses that his business has folded due to high taxes he is being demanded to pay URA? How do you feel? That is his question there. Then we have Peter Inimobende. Unfortunately, I'm never convinced with the session system in Uganda. Some of the URA tax collectors are incompetent, and some of them own big personal businesses where they don't pay any tax. It's the local people that suffer the most. There's been that saying that the big fish in this country do not actually pay tax. They have exemptions, tax holidays, and things like that. Mr. Twaha Kayondo, response to some of these issues that have come up as we wait for more.
Thank you. You know, whenever I get the opportunity to come around here and I get questions, then I feel that people are listening. And
then there's somebody...
and we are sowing seeds on a fertile ground.
And from Nansana, is it wrong if I withhold when I'm not a designated agent? That's Anne there with that comment. Very quickly, we're running out of time.
I'll start from Anne, who is getting us live from Nansana. it is not a crime for him not to, for her to withhold, as long as Anne is entering into a contract to receive commodities from a supplier, and the supplier is way above 1 million. Okay, for example, if at all you are found that Anne did not withhold, it will not be a crime. However, where Anne enters into a contract and he receives professional services, management fees, is supposed to withhold the 6% regardless. And then how do you feel? Of course, I can't feel good. I'm human. But you know what gets us to reach into the worst is because initially we take, sometimes us, including me, Ugandans, we always want to see what happens. We always want to see what happens at the 11th hour. We are told that we are supposed to remit ABCD. You're like, no, for me, no, I want to see what happens. And then the obligation grows. The obligation for you to pay grows. It earns interest and penalty. And what makes us close business, essentially, Kenneth, if I speak this out loud, is not the tax. But in most cases, the exorbitant penalties that we call for ourselves because they are within the law for failure to fulfill the obligation timely. Then you get the interest, you get the penalty, for example, for VAT. Okay? I may use the example for value-added tax. Remember, I told you, if Kenneth, you have a company, Kenneth and Sons Construction Limited, and so you're a taxable person offering, say, supplies to Karuma Hydroelectric Power, or supplying food stuff to a school, or you're supplying construction materials, iron bars, cement, and all that, which are standard rated, meaning they attract 18% value in terms of VAT. The person who is paying you is going to pay you inclusive of this tax. And you're only acting on behalf of government to collect this amount. But then, instead of you paying it timely by the 15th, following the month within which you've had the transactions, you continue keeping the money that has been given to you in trust to take to government. And then what happens? The law, the framers of the law made a law with deterrent effects. When I say deterrent, value-added tax compounds with interest. It's not a simple interest, the way if they remember the mathematics we did in primary and secondary. It compounds. So the amounts will grow two-way huge, to the extent that they will blow you out of proportion and you'll have to close. So it is always important for Ugandans to honor the obligation timely whenever the obligation arise, and there I'm sure we will not close business. And then what taxes are payable by NGOs? Of course, NGOs pay as you earn for the salaries they are paying to their employees, but also if they are not exempted, and I repeat, if they have not sought exemption from the commissioner after fulfilling the requirements to be put in the category of exempt organizations as per section 21 or section 2 BB of the Income Tax Act Cap 340, then they shall be liable to file for income tax. However, where they fulfill the requirement, say they are charitable, and they fulfill the requirement that no single person confer private benefit from the incomes of this institution. They are there to serve for the benefit of the bigger majority, whereby even when they are closing, nobody will ever ask that they share the commodity, the properties of this institution. Maybe it could be a school of a public character. It could be an amateur sporting organization. It could be a body established to administer professionals like ISPAO and ETS, and they fulfill the requirements. Then they will not be required to file they'll be required to file for income tax, but they will get a ruling exempting them to pay the incomes. And then I have already said they're supposed to pay pay as you earn. They are supposed to withhold if they are designated. If they're not designated, they must withhold on professional fees and management fees. It's a must, the 6%. So those are the taxes they are supposed to pay. However, at importation, unless they seek for exemption from the commissioner, whatever import they bring in will be required to pay the import duty as per the East African, the IACMA, the East African Customs Management Act, that spells out what is supposed to be paid and which rate is supposed to be paid for the commodities that are entering into the East African community. And then, of course, Obonyo is saying, how do they claim the withholding tax they have suffered? The withholding tax is their tax credit. It's an advance payment on the account. So in the manner that they are liable to pay, say, income tax, if I may use the example that Obonyo and his company is liable to pay 20 millions, okay, that results from the 30%. And if they aggregated the 6% withheld from them throughout the financial year, it adds to, say, 8 million, they will utilize this credit because the person withholding will issue them with withholding tax certificates, which in turn they will use to claim their credits, and it will offset the liability. So if the liability was 20 million, the 6 million that has accumulated over time from the 6% withheld from them will be removed first, and the remaining 12, 80, we were talking about 14, because if I gave an example for 20 million, then Okero will only be liable to pay 14 million because the 6 million has already been paid by the recipient of the supplies on Okero's behalf. So he will get the credits.
All right.
Yes.
Okay. Very quickly, as you wind up.
And then we have Brian from Chigo. He was talking about Brian from Chigo was talking about if they have withheld 6% from them, 6% is not a final tax, and therefore they are supposed to account for the remaining percentages. Remember, we have a 30% regime of income tax, and therefore if they have withheld only 6%, then you will be able to account or liable to account for the 26%.
There's somebody who is asking, why do you tax gratuity of government officials?
Gratuity of government officials?
That's what he says.
Of course, gratuity is income. And when you go and you want to tackle what we call employment income is spelled out in Section 19 of the Income Tax Act. And Section 19(1) and the relevant and the subsequent provisions spell out which employment income is liable to pay tax. And then when you get to Section 19 subsection 2 and then the following provisions, they spell out clearly which part of employment income is not liable to tax.
All right. Very quickly, then maybe just for clarity on Brian's issue. Brian was saying he has a company. After he's being paid, actually there's withholding of already 10%. They withhold from him 10%. Does he need to pay more tax?
It depends, because we have withholding that is taken as a final tax. For example,
all right,
the 10% that is withheld from mobile money accounts for a final tax. But then there are those ones that are not taken as final taxes.
All right. As we come to the end of this show, your final message to the taxpayers?
I would want to tell the taxpayers that we are in December. Let them file their returns that are due, and quickly the businesses whose accounting period ended on 30th June should file us a final income tax return not exceeding midnight on the 31st of December. And then for the current period in question that we are running, let them file the provisional return not exceeding 31st December. For individuals, they should have filed their business income return by the 30th of September. Of course, if they need any information, they can get us at WhatsApp 0772 1400000, but also our toll-free line, which is 0800 117,000. And of course, through our social media, Facebook and
all right,
and Twitter.
All right.
Spectrum on Radio 1 FM 90.